Good day, everybody. Still here. Daily Market Pulse. It's Monday, January 27th, 2014. We're just beginning of the week where we are going to be closing out another month of the new year this time. So stocks are pounded again. Lower volume this time, and also they did come off their lows. The markets and stocks, most stocks did as well. So they've been selling off pretty hard, as we know, and at some point that stuff's got to slow down. There's going to be some kind of a dead cat bounce or a full reversal. I don't think we're quite ready for a full reversal yet, and I will tell you why. Even though this may go higher, I would still expect some selling at some point, so I'll show you and tell you why. But nonetheless, down, lower volume, uptrend, still under pressure. No official correction as of yet. Distribution days at 7 and 6, so that's why I still think there's going to be some selling. There's other, of course, factors as well. I'll show you those as we look at charts. So Dow Jones on the screen here, you can see it went sideways through the first couple of weeks of January, and then faded pretty hard Thursday, Friday. Then today, a little bit of a sell-off. Let me see, that's actually, pardon me. Yeah, that's right. That's the 27th, so that's correct. So there's still room, of course, to the low here. There's a little pivot area right across here. Let me fix that for you. Right through there. Pivot area right there, right? So there's still room to that, of course. It had broken down above the previous highs as well on Friday. Accelerate. You can see the stochastics actually currently oversold, but that's not quite enough. Now we're getting a little bit of a slowdown in selling. We had 2 huge days to the downside, so we're seeing a little bit of a slowdown right now. So until we see more of a true bullish reversal, they're not really truly going to come up. So there may be a bounce, as I said, maybe at these levels or in this vicinity anyway. But ultimately, I think there still could be some more pain coming. So let's just look at the rest of the charts, and I'll show you the put-call ratio chart that we've looked at a few times in the past. S&P coming up, there it goes. So we have the sell-off. There was a resistance across the top. Could never quite get through. There was multiple doji spinning tops up there. Let me zoom in a little bit more across the top. So that was a sign that things may not necessarily go higher. And sure enough, the volatility, you see the Bollinger Bands were tight. The volatility was picking up. We knew that things were going to explode. We didn't know if it was going to be up or down. Since the trends, of course, were still up, there was a slight bias. It could still go higher. But the doji formations sort of give you a thought that, okay, maybe things are just not going to go through either. So everything looked bullish from the standpoint of the trends, but still there's a little suspicion with all these doji that things are just absolutely winding down, about to take a turn for the worse. Sure enough. So now back into that red line across there, 1780, 1785 area. That's where current support resides, or 1775, pardon me, not 1785. The support into this area, at least where the pivot is below, closed 2 consecutive days below the 20, but also outside of the lower Bollinger Band. So we may see a little bit of a sling back from here. You can see a little bit of a lower shadow developing on the S&P. The same things are happening currently right now in the futures as we speak. So that's why I'm thinking there might be a little bit of a bounce, which would be expected. Same thing with the VIX. I'll show you that as well. Outside of its upper Bollinger Band, so there's going to be a little bit of a sling back there too. But again, not a full correction as of yet. With still room to go lower potentially. Where that would be, hard to say. You just have to start looking at these levels on the way down. I got, of course, a window on this blue line right here. There's the channel line or trend line. There's going to be, it's hard to tell exactly where that next level will be. It might still be 1745 to 1750, but as deep as maybe 1735 to 1740, just as well. So that's the S&P. Let's look at the Nasdaq. Okay, so Nasdaq, you can see had a falling window. That's where things started to sell off. Accelerated Thursday. I'm sorry, accelerated Friday more so, and then again more so today into the 50-day moving average. So this is closed 2 days below the 20, now into the 50. There's still, you can see it's still trending higher. Obviously, the 50-day moving average is more of an intermediate trend, still trending higher, and now at the next pivot area, right at that 40, what level is that? It's 40. 63, 40, 65, 46, 40, 70 or so. So there's the possibility of support here. Again, lower shadow developing here. So we may see a bounce. There's still room, still much lower, but right now there could be a bounce after these 3 consecutive sell-off days. Almost oversold here as well. Let's take a look at the TSX. So TSX really selling off. You can see the 4 consecutive highs across the top. So there was a clear resistance developing there. And then it sank just very aggressively. It also into the 50, but also across the pivot area, across that 13,500, which we've talked about so many times back in October and November was a key area, and then again in December going into January, 13,500 was key. It was resistance, and then broke out and became a support area, which it got tested in the first week of January, and then exploded to the upside before coming back to retest those exact levels right now. Almost oversold, back into support. You see the lower shadow developing today. So a little bit of a bounce expected here, some kind of a retracement, maybe a third of the way or so, right? 0.38% to the upside, likely maybe as high as halfway, but we'll see how that goes, one step at a time. Certainly, let me show you from here the put-call ratio, right? So the upper third is the put-call ratio based on a moving average. This is 5 exponential. And then we have the SPY representative, and then we also have the VIX below. So what we're looking for is correlations, or sometimes inverse. You can see at the far left, this green area shaded. It got into over 1 into 110. That's where the put-call ratio was extremely high, and that's usually where the sell-off is likely to reverse, especially if the VIX simultaneously happens to be up and through the upper Bollinger Band. Now, it works really well in bottoms. It's not quite as effective in tops. But nonetheless, you can see the put-call ratio is way deep here at 0.7 and lower. We saw sideways action for the most part in choppy. The VIX was sliding, gliding sideways near 12, 12.5 before it finally exploding higher. And so we've seen that where the selling has occurred back into a support area, as we see on the S&P or the SPY. Now, the put-call ratio is not anywhere near 9 or 1 yet, so it's got to likely be up in those areas with the Bollinger Band even high, the VIX up in the Bollinger Band much higher levels still before we actually truly witness a true capitulation and sell-off and final bottoming formation. So that's why, as I said earlier, I still think there is more downside is possible still. We're still only under pressure for now, no true correction as of yet. Lower levels are still possible. I'm not going to say they will, but I'm just saying they're possible. So far, the bulls have absolutely been taking control of this market after even 5 to 5.7% drops. Every time you think there's going to be a larger correction, they turn it right back around again. So don't know what they're going to do yet. We're essentially, the put-call ratios at levels that is very similar to what it was back in November as well. So they may just stay right here. We will find out. Right now, the VIX is actually 2 consecutive days closing above, and I'll show you a closer chart of that here in a moment, and so you get better grasp of what's going on there. So if we move over to the U.S. Canadian dollar, you can see a shooting star, bearish engulfing, and then a little bit of a bounce back today. So it's trying to hang on, a little bit of profit taking the last few days. There is a divergence. You can see the divergence in the stochastics right now. So possibility of more downside here and more pain, but right now not fully confirmed as of yet. Let's look at treasuries. Treasuries, we had said heading into 131, 132, could be as high as even 134. That's where the real resistance and pivot area is, but certainly as it gets into the 200-day moving average, it could slow down. Dark cloud cover essentially today, but it's not fully convincing to me right now. There's a lot of air between the lows and the 8 moving average, which means it's very bullish right now. And it could still have more upside. It may want to take a swipe at 134, but it's challenging to actually predict that. It still looks very strong still. The markets are likely to go lower, the treasuries are likely to go higher, I would think, in an inverse manner. So for now, it's neutral to an extremely short-term basis. Maybe a slight bias to the downside, but that's going to be profit-taking selling and not so much massive corrective type selling, in my opinion. Let's go to the yen. The yen, remember, had come off the support levels, came up into the 50, holding the 50 right now and holding the former support, which then became resistance and now becoming support once again right across that 96 to 97 level right now, and where the 50-day moving averages are right now. Slightly overbought. That's why it may just take a little bit of a pause, a little bit of profit-taking period here before it starts to resume even higher. So I'm looking for this to go into 99 and possibly higher. Gold was pretty quiet today. It's into that 1275 area right now, 1280, following a doji, and then of course a little bit of a bearish engulfing spinning top-like formation. You can see that little candle just formed there, that green one, that just gapped lower on the open, but trying to hold the 8 moving average as the 20 is rising, about to cross over the 50. So looking for some strength to be added here on this crossover, and for this to start racing probably through 1260 and then all the way through 1280 and maybe higher if it gets through those levels, especially if it gets back up to 1280. Good possibility, and that's where it goes through, because this whole formation now becomes kind of a rounded bottom like formation, so it looks pretty compelling to the upside. Crude Crude was coming into 97, 98, and then bearish engulfing, and so you can see the 20 was still declining, the 50 was flattening, the 8 is coming. So all the moving averages are clustered together, and so you knew that a little bit of confusion certainly. So price action not likely to move just yet until there's some kind of resolution. The stochastics was already overbought, so coming into this level, you'd expect that it was going to be kind of weird, and you'd be a little more cautious with it. I could still see oil going higher into 98, and particularly 99, and possibly back to 101 and higher, like we talked about way back. But right now, neutral for the most part, just taking a pause and rest until things sort of resolve. Natural gas has been very, very strong. Natural gas has been going higher and higher. Let's take a look at that. There it is. Let me back away from here just a little bit. You can see the big kind of rounded bottom. It cleared that pivot area at 480. Retraced somewhat today after making a new high at 520, but this still looks pretty strong to the upside, I believe, still. Let's take a look at small caps, because that is sort of the risk on, isn't it? So the IWM, we'll look at here right here, representative of the Russell. So we talked about risk on before. It made new highs just a few days ago before flushing to the downside. Now closing below the 50 for the first time in quite some time, and holding at a former pivot area right around 112 or so, with a little bit of a lower shadow, like I said before. With all the selling, you typically would expect some kind of a percentage retracement bounce, and as we just said, that could very much happen, ultimately with probably more selling to come later. So we'll see how they react to this thing right now. It all depends on what happens later today, of course, or tomorrow as well, as to how they open this thing. Because you've got a lot of individuals who go on margin, and if they get called, then the selling will accelerate. And that's okay. If it does, it's just take advantage of the shorts, and also usually when things accelerate, they get closer and faster toward capitulation, which means that you're that much closer to a bottom, and then you're looking for that massive reversal where all the panic sets in. That's the buying opportunity. So you can see the drop could easily be into this level and maybe flush below that, the 109 area, flush below that very rapidly before resuming. It might even come back and touch the 200-day moving average near a 105. The VIX probably will go straight to that. And so a while ago, when we had a little correction right in through here, so I thought this area right here would come up and race into 1819 to where the window was, that little red shaded area. Of course, it came all the way back with the markets bouncing back. The bulls once again surprising everybody by bouncing. But now you can see this is what I was expecting before, a very sharp, rapid sell-off. The VIX really exploding right into 1819. So it's right into that window area that was there before. I was expecting that to be a target, but also potential resistance. It has. It's outside the Bollinger Band. That's why, again, look at that upper shadow. There's going to be some kind of a retraction, retracement, a pullback based on that, and that's why there's going to be a little bit of a bounce in the markets. And I think it could be temporary. We'll of course have to wait and see, one day at a time. Watch the candles, watch the formations, watch the patterns, and we'll get a better clue as to what's going on there. But that's what's happening with the VIX there as well. So if this can go any higher through 1819, then you're looking at, again, 2021, possibly higher. The trend, see that dark red line there, that is in fact an old trend, right? Those are all a series of highs across the top. So it can go into that. That would be some idea of some resistance. Plus you've got the pivot areas there, 21 and 22, and as high as even 23. So that could all be blown out of proportion as well. It's not happened in quite some time, as you can see. Through the whole year of 2013, the markets never dropped more than 5.7%. So it may be due. And this could really, catapult through 21, 22, 23, maybe higher. You never know. We'll have to wait and see what transpires. But right now, that's where we're at.